Hello everyone, welcome to today's webinar. I'm Rashmi and I will be facilitating the webinar. Today we are going to talk about auditing standard ASA 320, which is materiality in planning and performing an audit. I will explain and try to illustrate with few examples how you can use the auditing standards to increase the speed and efficiency of your audits. In today's session, I will talk about the scope and the requirements of this auditing standard. It is very critical to understand all this to apply it while doing audits of SMSF and also to comply with auditing and assurance standards. Before we proceed further, I would like to tell you that I have uploaded the handouts which you can download and refer to it. I will just spend 2 minutes on scope and move on further and explain other requirements. It is very important that you understand every audit opinion you form has to be supported by sufficient and appropriate audit evidence, and the level of evidence you need is based on your assessment of risk. So, if there is low risk associated with the audit, then you need less amount of testing. And if the risk is high, obviously you have to do more testing. So it is your responsibility to apply the concept of materiality and risk assessment to get sufficient and appropriate audit evidence to support your audit opinion. Also, you have to make sure that you are applying it appropriately both in planning and performing the audit. You have to make sure that you are applying both at the financial report level and at the assertion level. At the same time, ASA 450 requires you to consider the possibility that the cumulative result of uncorrected misstatements below the materiality level could have a material effect on the financial report. I will not discuss the requirements of ASA 450 today. I will be discussing only about ASA 320. I'll move on to the next slide and discuss the requirements of the auditing standard briefly. First requirement is to determine materiality for the financial report as a whole. This should form part of the overall audit strategy because it is the starting point. This is where the risk assessment procedure starts. It also requires you to determine performance materiality. Again, the only purpose to determine performance materiality is to assess the risk of material misstatement and to determine further audit procedures. Another requirement, which is very important, is to revise the materiality level or set the lower amount if required during any stage of audit. Last but not the least requirement is to document all of the above. So you have to document overall materiality, which is materiality for the financial report as a whole, performance materiality, and any revision in the materiality levels as the audit progressed. I will explain all these requirements in detail in further slides. Moving on, I want to get your mind working here. I've got a few questions for you. So the first one is whether we should do 100% testing or sample testing. There are auditors who are checking all the items. I'm not saying that they are wrong, I'm just saying that they are testing 100% because they think that if they will not check all the transactions, they will miss out some contraventions or something. But if you look at the ATO's audit report, it says that auditor's job is to provide reasonable assurance whether the financial report is free from material misstatement. It doesn't say absolute assurance. So your job is to obtain reasonable assurance by obtaining sufficient and appropriate audit evidence to reduce audit risk to an acceptably low level. What is we are forming an opinion on is very important. That's the first thing which I believe enable us to understand what we have to check. The way to increase the efficiency of audit is not to audit what we don't have to audit. To support this, I have got this statement from audit report which I'll read out for you. It is the procedures included examination on a test basis of evidence supporting compliance. These tests have not been performed continuously throughout the audit, were not designed to detect all instances of non-compliance, and have not covered any other provisions of the SIS Act and the SIS regulations apart from those specified. So, what I think after considering the facts, sampling should be used in SMSF audits as it provides efficiencies. We can use the results of risk assessment procedures as a justification for lower risk and therefore a lower level of testing. This is just a fundamental concept which I think you should apply while doing audits. The auditing standard we are discussing today will help you in determining the audit procedures and sample size, which will further help you to make your audit process faster and efficient. I will move on to the next slide. Um, First of all, we should understand when materiality and audit risk should be considered. That means at what stage of audit, whether we should consider while planning the audit or while performing the audit. As per my understanding, materiality and audit risk should be considered throughout the audit, in particular when identifying and assessing the risk of material misstatement, determining the nature, timing, and extent of further audit procedures, and evaluating the effect of uncorrected misstatements, if any, on the financial report and informing the opinion in the report. So, if the materiality level is high, you need to obtain higher quality evidence to support your audit opinion. If it is low, you need lower amount of evidence. So the materiality level, risk, the quality or amount of audit evidence is all interrelated and they should be considered throughout the audit. Now, I will explain you the factors which I'll go with the factors in the coming slides, which can help you understand what information is material. There is no set formula to determine materiality level. Judgments about materiality are made in light of circumstances and are affected by the size or nature of a misstatement or can be combination of both. Any misstatement, including omissions, are considered to be material if they individually or in aggregate can influence the decisions of users taken on the basis of the financial report. Moving on, determination of materiality is a matter of professional judgment and is affected by your perception of the financial information needs of the users of the financial report. In this context, it is reasonable for you to assume that users have a reasonable knowledge of economic activities and a willingness to study the information in the financial report with reasonable diligence. Second assumption is that users understand that the financial report is prepared, presented, and audited to levels of materiality. It is also reasonable for you to assume that users recognize the uncertainties inherent in the measurement of amounts based on the use of estimate and the consideration of future events. And auditors can also assume that users make reasonable economic decisions on the basis of the information in the financial report. Let's move on to the next slide and we'll discuss what risk factors you need to consider while auditing. Materiality differs in nature between a financial audit and a compliance engagement. The preliminary assessment of materiality is mainly based on quantitative factors. So, my question to you is how to obtain a preliminary understanding of the self-managed super fund you're auditing. Answer is you can get an overview of the fund by looking at the trust structure, nature of its investments, parties involved in the management of the fund, and the related parties of the trustees and members. In addition to this, you have to understand what are the major risk areas you need to consider when auditing. The important risk areas are investments, contributions, benefits, and revenue. Like for contribution, you need to ensure that they are calculated correctly, have the appropriate preservation status, are properly allocated to members in the appropriate period, and treated correctly for tax purposes. Let's take another example for residential property. The areas you need to consider for residential property are market value may be materially misstated. It may be purchased from a related party, may be leased to a related party, or it is not even owned by the SMSF. These are the risks which are associated with the residential property and need to be considered while determining the maturity level. You cannot apply the same audit procedures to 5 million fund which you are applying to 1 million fund. Like I was saying, your job is not only to assess the risk and apply the audit procedures. You have to assess the outcome of the audit procedures, which is very important and critical. To assess the materiality of misstatements identified in the financial audit, or contraventions identified in the compliance engagement and their impact on the auditor's report, you have to consider both their amount, which is the quantitative factor, and the nature, which is the qualitative factor. Now, qualitative factors which you can look at includes significance of a misstatement to that particular SMSF, the pervasiveness of the misstatement, and the effect of the misstatement on the financial report as a whole. So you have to consider all the factors associated and work accordingly and determine the further audit procedures. Next slide, we'll talk about overall materiality. Overall materiality is materiality for the financial report as a whole. So while establishing the overall audit strategy, you have to determine materiality for the financial report as a whole, as well as the performance materiality. Calculating quantitative materiality levels is usually based on a percentage of a particular benchmark. I have a question again for you. Is there any formula to decide on benchmark? Both the benchmark and percentage involve professional judgment. The benchmark is usually based on what is important to users of the financial report. Examples of benchmarks, depending on the circumstances, include profit before tax. It can be total revenue, can be total expenses, or the total assets or net assets. So again, it depends on circumstances and your judgment what benchmark you want to select to calculate the materiality level. A percentage is often applied to a chosen benchmark as a starting point in determining materiality for the financial report as a whole. And the percentage applied is also, again, is a matter of professional judgment. So you have to consider, all the factors associated with that particular fund and decide on the benchmark and the percentage. Now I'll move on to the next slide and discuss the factors that affect the identification of an appropriate benchmark. Most important factor is the elements of the financial report. For example, the elements can be assets, elements can be elements of liabilities, revenue or expenses. So you have to check whether there are items on which the attention of the users of the financial report tends to be focused. For example, for the purpose of evaluating financial performance, users may tend to focus on profit or revenue or net assets because their purpose is to focus on profit and to check the revenue part. Also, you need to check the industry and the economic environment in which the entity operates. The last one is the relative volatility of the benchmark. So you need to consider all these factors to select an appropriate benchmark depending on the circumstances. Now I'll move on and explain the requirements in relation to performance materiality. I will first start with the definition. Performance materiality means the amount or amounts set at less than materiality for the financial report as a whole to reduce to an appropriately low level the probability that the aggregate of uncorrected and undetected misstatements exceeds materiality for the financial report as a whole. It simply means a lower level of materiality than the overall materiality or a specific materiality that will allow you to have a margin or buffer for undetected misstatements because it takes into account that a number of immaterial items, if undetected, may in aggregate become a material item. So you shall determine performance materiality again for purposes of assessing the risk of material misstatement and determining the nature, timing, and extent of further audit procedures. So the question here is how to determine performance materiality. The determination is not a simple mechanical calculation and it involves your professional judgment. Interestingly, the level of performance maturity is not directly linked with risk assessments, but is influenced more by your understanding about the entity, nature and extent of previous misstatements, and expectations for misstatements in this period depending on your understanding about the fund. Moving on, this slide talks about materiality requirements in ASAE 3100. ASAE 3100 also requires to consider materiality in planning and performing the compliance engagement. In assessing materiality, again, you need to consider both the qualitative and quantitative factors, which can include whether a disclosure of a breach would influence members, trustees, or the ATO's perceptions or decisions, including, whether the whether the breach would be reportable in an ACR. Also, you have to consider potential monetary value of increased tax resulting from a breach and the potential monetary value or severity of any penalties. Now, we are going to talk about revising materiality. It is very important to revise materiality as the audit progresses. You need to revise materiality for the financial report as a whole, which is overall a materiality, and if applicable, the materiality level for particular classes of transactions or account balances. In the event of becoming aware of information during the audit that would have caused you to have determined a different amount initially. Materiality for the financial report as a whole needs to be revised as a result of change in circumstances that occur during the audit, can be result of new information, or can be result of a change in your understanding of the entity as a result of performing further audit procedures during the audit. We are going to last presentation slide and very close to finishing the webinar. Next slide will talk about documentation. You need to include in the audit documentation the amounts and the factors considered in their determination to comply with the requirements of ASA 230, which is audit documentation. Documentation should include the benchmarks, percentages, and judgments used in determining each of these materiality considerations, whether it is overall, whether it is a specific materiality, if applicable. You need to document any benchmarks or judgments for calculating performance materiality, and any revision in these items as the audit progressed. So this is the end of the webinar. Mm, if you have any questions, please email me at rashmi@trustdeed.com.au. Also, we are running series of seminars, and if you like to gain more information, please register yourself on our website. You can also look at the agenda and topics and the speakers for the seminar on our website. Have a great day ahead. Look forward to interact with you in future. Thanks for your time. Bye.